Well, hello folks out there in YouTube land. Got a big show lined up for you, and let's get right on into it. All right, folks, this is a big update. We just got a Q&A from Ilus and JP Backwell, and it's a good one. It's got a lot of information. This is going to be a big update, and it's going to have a lot in it. I'm going to try to keep it in a reasonable time frame, but there's so much to go over that, you know, it's quite a bit. So we'll see how it goes. But let's talk about what's going on with our boys here, Brett Rosen and George Sharp. All right, so these two guys have really gone at it, and it's just ugly. It's on Twitter, of course. That's what they do. And George Sharp's been attacking Ilus, and Brett Rosen's been attacking back on Humble and some stuff that George Sharp's involved in, and it's just been kind of a melee, and it's been nasty.
Let's get ready to rumble!
Yep, that's what it pretty much is. So let's look at what's going on with them. I won't take a ton of time on this because I think it's sort of a sideline thing, but we're going to get into the real important stuff just right after, but it'll be a little bit entertaining anyway. So most of you probably know who George Sharp is, the CEO of Forwardly, and he's involved with a lot of other stocks, including Humble, et cetera. And he's been wearing out Ilus, and he kind of does this. He goes after certain companies that he doesn't like for various reasons. And he's been going after Brett Rosen and calling him a liar and a crook and all this sort of thing. And he's been basically saying that Brett Rosen got stock at par value, 0.001, for like $53,000 from Ilus. And he says Ilus continued to con job with the revised filing. Brett still lies, et cetera, about the par value and what he paid. And we'll get into that par value here in just a minute, but let's see what Brett Rosen's been saying back. And in return, he's been sort of attacking Humble, Scamval scams, et cetera. And that's pretty much to get back at George Sharp and talking about the lawsuit and all that. So these are just two guys that are going at it. Yeah, and I don't think it's going to stop. This is probably going to go on for quite a while, where they're basically calling each other liars, etc.
Liar!
So we're going to get into the update that Ilus just gave us, and I think that's the important thing. I'm not going to worry as much about all this going back and forth between these two individuals. Let's look at what's going on, but let's start with the stock itself. It's had a good day. Let's see, it's up about 12% right now. And I bought again down here at this 6-cent level. I just couldn't help it. I looked at that market cap and I've looked at the financials, and I was pretty comfortable with that. So I've just dollar cost averaged. And I started out buying this stock way back here at 5 cents. And I've bought a little bit right in here at 21 and also at like 11. And now I bought at 6. So I'm actually just a little bit upside down, not much because I bought most of it at 5. But I'm comfortable. Like I say, this is a penny stock. It's risky. And if you're new to penny stock, you need to watch this next few seconds. If you're used to the OTC and you know how it is, well, you know, you've seen this before.
Danger, Will Robinson. Danger. No, Will Robinson. Danger.
Yep. Danger, Will Robinson. Just always be careful. You know, I practice the 10% rule. I only put 10% of my portfolio into OTC stocks because they are so risky. But I enjoy them because I do like the volatility, and I like, you know, the risk level. And sometimes you can do really well with them, and sometimes you get hammered. But today, like I said, up 12%. So it's nice to see it back up to this 7-cent level. And I'm comfortable where I'm at right now. I have been picking up a little bit. Like I said, I bought some yesterday there. I bought it, and I bought some CYBL as well. But here's the big thing. This is really important. I'm so glad they did this. JP Backwell does this sometimes. I even like this better than the video recorded ones that he does, because this gets to the heart of it. And he got these questions from the Ilus Discord, which is a really good Discord. And I'm confident that Igel was involved in this because it's got some of his fingerprints on some of the questions. I can tell it's somebody that really has studied this, and I really like these questions. So we're going to get into this, and I'll try to keep it as brief as I can. Okay, in this one it says, we've heard a number of different timelines for completion of the audit. The most recent update was into July, and they've been talking about trying to get it done by the end of summer. And it says, we see this as a very important step. This is a question from the Discord. In validating the legitimacy of Ilus in the eyes of institutional, even standard retail investors. It's crucial for bringing sentiment back in favor of Ilus. And then JP answered, our 2020 and 21 audits, which are required in order to submit our application to be fully reporting, should be completed at the end of August. The 2020 audit is completed, which was the most difficult to have audited since it is the period where the company was not under our management. So I can understand why that took a long time. That's tricky. The 2021 audit is expected to be completed by the end of this month, after which we will submit our Form 10 to go through the process of becoming fully reporting. The Form 10 itself is being prepared and awaits the final audited figures to be filled in. They had spoke of completing this 2-year audit during the summer, and therefore we feel like we are still on track. And if you want to read the total answer on this, like I said, it's on Twitter, Ilus Twitter, and you can check that out. But I'm just going to briefly cover this and try to cover the nuts and bolts of it. The next question says the timeline for closing of the 2 phases of the European deal was supposed to be end of 2021 and early 22. We understand from a subsequent update the timeline was pushed back due to issues related to the Serbian government elections, and that the deal was in fact has been significantly increased in scope compared to the original deal. And let's get to the answer. It says phase 1 of EU was been delayed because we recently opted to purchase a larger property outright. We've been going through this purchase process as well as the finalization of revised government incentives, etc. It says the larger phase 1 site provides us with facilities for the full range of the E-Raptor commercial utility vehicle, a large separate entrance facility for the Replay Solutions urban mining subsidiary, and so on. It says we've decided to delay our occupation of the phase 2 facility for regional political reasons and due to the occupation of the larger phase 1 site, which offers us more capability than originally planned. This does not mean that we won't proceed with phase 2. We're exploring various options for the huge site with the Serbian government. It goes on further, but that gives you a pretty good understanding of what's going on there. They've got a bigger opportunity with phase 1. They may not need to rush phase 2. Then we get into some things that have been talked about online. Similarly, no news has been heard regarding PPP, Vera, and Curve. And while neither these nor Bullhead and Georgia Fire were included in Q1, the latter 2 were, which was Bullhead and Georgia Fire, but not PPP, Vera, and Curve. Can you give us an update? It says we recently opted to walk away completely from the PPP acquisition at its very final stages for 2 main reasons. It failed due diligence, and the acquisition being made by Quality Industrial provides all the capability which PPP would have provided. So this company obviously overlaps. It says they're looking to restructure the deal with Vera Drones, and we cannot discuss it further until it's agreed upon. Curve XR is very much a part of our business, and we've been actively selling its technology in the Gulf region. Curve X is also responsible for the defense and firefighting software development for the Ilus suite. And it says responding to no news has been heard regarding. It says we have done our best to provide updates on progress, but I also understand that some shareholders do not wish to have updates and only want to hear about the completion of deals. Others wish to be updated. We do our best to listen to shareholders' suggestions and try to respond accordingly. Then it talks about the UK deal and a large Asian company that could be purchased. It said we decided as a board last week to not proceed with the UK deal. They have a larger potential acquisition in the U.S., which would provide us the necessary CNC and plastic welding capability that would be required, and a larger company. So the UK acquisition would have come at a high price, and they decided not to go down that road. The Asian deal, which was discussed previously, failed due diligence. This has also happened with several targeted acquisitions, which we have not mentioned. Since then, we have signed a letter of intent with another Asian company for a renewables subsidiary. We believe this business has greater potential given the other acquisitions. All right, now they're getting into some serious stuff here, talking about common shares versus preferred, Nick Link's shares, and also JP's. And this is getting into the weeds a little bit, but it's important. It says after conversion of most of Nick's common shares to preferred, the current outstanding shares 1.3 billion, and the authorized shares is 2 billion, leaving 650 million if it were to be maxed out. The preferred shares that were recently issued for Nick's converted common shares and staff and other compensation which convert at 1 to 100 back to common, currently total 8.9 million, which would be 895 million common shares, more than the authorized shares. And then it goes on, it says, it's clear that any shares removed from the outstanding shares framework of the prepared shareholder lockup program is only a temporary outstanding share reduction measure, as these shares will obviously eventually have to be converted back to common. It's also clear that the current authorized shares cannot accommodate conversion of all of the currently B and F shares. What are the plans for these preferred share classes, and how will those plans affect the outstanding shares? Will they be converted in the foreseeable future, and if so, will this require increasing the authorized shares? Now, this is a very important answer, and they've spoken to this before. It says there's absolutely no intention of going anywhere near the 2 billion authorized shares. If anything, we are trying to reduce or not increase outstanding shares. Obviously, for potential funding and acquisitions from time to time, there may be shares issued, as has been seen recently. That'll be the 53 million. Even in this regard, though, we are taking a very smart approach to acquiring large companies, such as what we are doing with QIND regarding the math being used for Nick and other inside converting their shares. Whilst it may be correct, it does not consider the following. Nick and other insiders are highly regulated by the SEC and cannot simply convert and sell shares as they wish. The ability for large shareholders to convert and sell shares is governed by the SEC rules. As evidenced by Nick and other company insiders not having sold a single share to this point, we have no intention of doing so for the foreseeable future. He spoke to this back in April of 21. It says, which makes the above question completely irrelevant. If it was relevant, we would have increased the authorized shares in preparation for conversion and sale. Even though, as per point 1, this would be almost impossible to achieve, despite what many who do not understand the rules may threaten. And then he goes on and he says, we as the core management team of the company, insiders, have a 10 to 20 year view of building Ilus into a global brand such as GE, United Technologies, etc. This is a destination business for us, and selling shares in the short term or even mid-term makes absolutely no sense in light of our strategy. We are driven by the mission to build a long-term, successful, and sustainable company with multiple spin-outs, and this motivates and incentivizes us the route towards becoming a truly global brand. When one considers this, our plan, and its corresponding rewards, one would understand that selling shares for even $1 pales in comparison to the return on investment given what we are building. It says we cannot communicate this every single time people who don't understand or try to spread it on social media. So that's a pretty darn good answer. Okay, now we're going to get into the Brett Rosen thing. Okay, this is some of the juicy stuff. It says we understand that the 53 million shares to Brett Rosen are indicated in the share issuance table with par value of 0.001. And that's the thing George Sharp's been talking about. It says, but that in fact he paid $530,000, not $53,000, for a price of 1 cent for the GPL note, which converted into these shares in an agreement that linked that purchase with conversion of 12.6 million additional shares at 50 cents for a combined average price of 10 cents a share. However, in the equity table, it shows $53,000 for 53 million, which corresponded to the par price. We understand that the difference represents additional paid-in capital, but GS, that's George Sharp and other, calls them trolls, are using the $53,000 as proof that only 0.001 was paid for the shares. Is there anything in the filing or anything that can be provided to show that the agreement shown to the concerned shareholders is indeed valid and that this is the price that he paid for these shares? Now, this is from J.P. Backwell. His answer said, many months ago, RB Capital secured all the GPL debt to ensure that Ilus is protected and could move forward smoothly. It was better funding from a supportive funder. So to clarify, RB Capital, not Brett Rosen, but his company that he owns, acquired the GPL note plus its interest in return for 53 million shares being issued to them. The full loan amount plus the interest was converted for shares, meaning that it was written off our balance sheet, reducing our liabilities accordingly. While RB Capital paid $530,000, not $53,000, the correct accounting procedure for reporting this, as approved by our auditors, is that the 53 million shares were shown at par value, and the rest goes into paid-in capital. The correct accounting procedure shows the debt is settled, the interest is settled, and the shares are issued. It's accounted for as such in the disclosure, again, and stipulated by our auditors. So he paid $530,000, not $53,000, and then he had more shares for 50 cents, which basically comes out to a 10-cent average. Now look, do I think that people get sweetheart deals when they take over toxic debt and when they loan money to penny stocks, especially on the front end? Yeah, they get sweetheart deals. That does not shock me. It happens all the time in the OTC, but it's not some horrible deal, or there's no way Nick Link would have gone along with it. They needed rid of that GPL debt. And so they worked out something that put money in the on the balance sheet and got rid of bad debt that they needed rid of. So, and they've got money lined up from RB Capital for future acquisitions. So I understand that. Like I said, it's not perfect. It's not like this company was able to go to a bank, a year and a half ago or a year ago and say, hey, I want prime plus one on a 20-year amortization with a 5-year balloon. That doesn't happen with these type of companies. They've got to get capital from venture capitalists, and they're looking for deals that make sense for them to equal out the risk they're taking. Because I'm assuming that Nick Link and JP Backwell didn't personally guarantee loans to RB Capital. That would be kind of foolish. So, RB Capital takes on the risk. And if it works out for them, they get rewarded. If it doesn't, they lose their butt. So that's kind of how it works in the OTC. It's risky, and there are sweetheart deals across the board. And Humble had those. AITX, I'm sure, does. They all do. That's how it works. Risk versus reward. And sometimes it doesn't look so good on paper 6 months later, but at the time, the CEOs are going to make decisions they think are best. All right, so is there any update that can be provided on the shared lockups? What type of incentives will Ilus offer to the locked up shares? And that's where they're talking about trying to get the common shares down and doing some lockup with some interest to people that are willing to do that. Or, basically the shareholders. It says the share lockup is still very much on the table, being worked on behind the scenes. We do not think it's best to act in the best interest of shareholders, and therefore we believe the share lockup should take place at a time where it will create optimal value for shareholders. Given what we know is developing, we believe that we have not reached the correct moment for the share lockup. It says, while reducing the outstanding shares is a high priority, always on our minds, rushing a share lockup as a result of pressure, even though it's actually not in the best interest of shareholders at the time, is not the way we will ever do business. So they obviously haven't hit it just right. It says, reaching and achieving critical milestones such as our audited completion, Form 10 submission, etc. Says once that's all done, at that point, we feel that the share lockup will have a larger uptake and will be in a better position. All right, so that's a whole bunch. That's a lot of information. And if you're an Ilus shareholder, you're looking to be one, you really ought to go to Ilus Twitter and read the entire thing. I really chopped it up and tried to get down to the nitty-gritty on it and things that interest me as a shareholder and has been for over a year. And I found that extremely helpful. Now I kind of know really exactly how things were handled with RB Capital, and I know what their future plans are as far as some of these acquisitions. And it's understandable that, hey, sometimes you do your due diligence, not there. Let me tell you something. There are a lot worse things you can do than walking away from a deal. Having been in business many times, sometimes you just need to walk away. If the deal starts turning sideways, walk away. Just walk away.
Just walk away, and there will be an end to the horror.
That's right. Just walk away. Got to end that horror. And very quickly on this thing, the reason that I bought some at 6 cents is because of fundamentals. I like where this company's headed. I like the fact the revenue has skyrocketed up to $19.6 million from the first quarter of 21 all the way up to the second quarter of 22. That's a heck of a run up. And while their net revenues didn't go up quite as high as that, I was hoping this would be $2, $3, $4 million instead of 1.1 in profit. That's still a nice profit. It's not bad. And I would think over time this will get better as their revenues continue to go up and they become more efficient and they don't have all those closing costs and one-time costs that you're always going to have in a large acquisition. There's just a lot of professional fees, accounting, legal, travel, etc., that really get expensive. And I could see that eating up, $500,000 or $1 million of this revenue pretty easily. And as far as our friends, the shorts, they're still there, don't you worry, 52% yesterday, and they've been hanging around 50%. So half the shares that have been bought of Ilus almost every day is people shorting this stock and selling it real quick. They're not really selling it because they have to buy it back, but understand that's how shorting works. They're renting the stock. They run off and sell it. They have to buy it back. So it's not, it's technically a sale and it puts downward pressure, but it's not real. And then when they come back and buy it, hopefully at a lower price in their mind, they buy it lower and keep that difference. And they pay a little tiny percentage for those shares from somebody holding it long term. That's how that works. So they're going to try to beat up this stock, and you're going to see them all over social media. It's what they do. And the whole Brett Rosen thing and all that is something fun for them to jump on. All right, folks, I'm going to cut this off now. It's getting too long. Hopefully that wasn't too brutal on you. Like I said, go to Twitter and read the whole thing yourself. It's worth the read. If you like this content, be sure to hit that like button. Lets me know to continue to cover Ilus. And if you haven't subscribed, hit that subscribe button. I'd appreciate it. And we'll see you next time on Mr. Frugal Investor.